welcome back to the channel. We got a lot to go over today, friends. This has been a very crazy 2 weeks. You haven't seen a video from me in a while, so make sure you're following me on Twitter. That's where I do all my updates. I've been dealing with stuff at home. My wife is sick. I'm taking care of my father-in-law who has dementia. I got to take care of my wife too, my mother-in-law, the cat, the dog. So there's a lot going on, and I work full-time at the same time. That's why you haven't seen videos. Follow me on Twitter. You see a lot more there. But make sure you like, make sure you're subscribed, especially for the people who follow me on Twitter. We got like double the number of followers on Twitter. Some of you need to start subscribing on YouTube because these videos, they are giving you a good idea of where my head is. And it's very different on Twitter. You're not always getting the full picture. So make sure you're following me on both and make sure you subscribe, make sure you like and leave some comments, all that kind of stuff here. That's the only thing that grows the YouTube channel because I barely make any money off of it. I don't take any sponsorships and I take my time with the videos, but every time I do one, I'm gonna give you a nice, long, detailed video. So that's what we're gonna do today, and here is the game plan for today. Today, what we're gonna do is we're gonna talk about what's going on with Bitcoin. Why is it really crashing? What does it mean for the market? And then we're gonna take a look at where we see the market going. Now, with the altcoin charts, this includes EGLD, Ethereum, Cardano, all these other big charts. I want you to know that during this time, those charts don't matter as much. What you really want to look at is what Bitcoin's doing because Bitcoin is a reserve asset. If Bitcoin continues crashing, they're all going to continue crashing. So why follow those charts when you can follow Bitcoin first? Follow Bitcoin first, understand what's happening there. Then you look at the other charts and you extrapolate the information and compare them. That's kind of what we're going to do today. This is a very important thing to do. You want to make sure that you are not ignoring it. Okay, so the first thing that I want to do is I want to start looking at the charts. Make sure you like, make sure you subscribe, make sure you follow me on Twitter. All those things, get it done. All right, here we go. Game on. All right, let's see what the heck's going on. Why did all this happen? Let's figure it out. Okay, so we're going to switch over to the normal view. So what you're looking at now is you're looking at the Bitcoin chart, and this is actually on a percentage scale. So I've set this to the percentage scale, and the reason I've done this is because I want to compare this to a couple of things. So the first thing that I want you to see, I want you to keep a very close eye on is down here, okay? This is the RSI. One thing that's very important about the RSI is that the last time that RSI has been this low was actually at the March 2020 crash. Now, what does that mean? Well, the first thing is what happened during the March 2020 crash? I mean, this was a liquidity crisis because the entire world was shutting down due to the pandemic. So you saw here that Bitcoin crashed, but so did everything else. Everything crashed. And now, 2 years later, we're seeing us hit the same levels. But guess what? The economy is not shut down now, right? Things are actually working. So why is Bitcoin crashing nearly just as hard? You know, I mean, RSI is relative strength. So that means right now, this is the worst crash since March 2020, whereas we're in a completely different climate. It's a very interesting concept, and we're going to take a look at why. So the first thing that I want to do is I want to take this chart and I want to compare it to a couple of things. So we're going to add here the 2-year US Treasury yields. I think, do I already have those here? No, I don't. Okay. There we go. It's turned off. So this is down here, the 2-year Treasury yields. Now, if we look at this, in a percentage scale, obviously, what you start to, well, the first thing is, right, if you look at it at a regular scale, you see that the 2-year Treasury yields are basically flat because they're not really moving. It's moved from like 0 to 1%, like up and down there. So what we're going to do is we're going to look at it in percent. So you can see how much it's been moving by percentage. And what's really interesting about this is that the Treasury yields have gone up massively since about June of 2021. You started to see a dip here. It came back down to about the 0 level, and then you started to see it massively go up. Now, what's interesting is when it first started going up, Bitcoin actually went up too, and then Bitcoin corrected during the time that it was going up much further. But then what happened? Well, the Treasury yields kept going up and Bitcoin kept going up. Now, once we got a lot of news in like November, December, and January about the Fed ending their quantitative easing, like basically what this is what the Fed said that they're doing. They are going to stop pumping as much liquidity into the market. So they were doing like upwards of $120 billion a month throughout this entire time period, right? They were pumping that liquidity into the market. Now what they're doing is they're starting to slow that down. And at the same time, they're making Treasury yields go up. That means that people can invest in bonds and get an actual return instead of getting 0. When everyone was getting nothing from Treasury yields, Bitcoin skyrocketed. Now, as people are getting more money from Treasury yields, Bitcoin's dropping. So the correlation there is that all risky assets are dropping. Right now, Bitcoin is considered a risky asset because it's so volatile. So a lot of the institutional money that came in is starting to go out. Now, not obviously you don't have like Michael Saylor doing that, MicroStrategy doing that. So the people who understand the fundamentals of Bitcoin, they're accumulating. I mean, that's what I'm doing because I understand that this type of thing is not sustainable. And I'll tell you why. So let's take a look now at a couple of other things. We're going to add the DJI onto here. That's the Dow Jones Industrial Average. And we're going to add the SPX. So that's the S&P 500. So these are the main indices of the New York Stock Exchange in the United States. So what we're going to do is we're going to take these and we're going to move them to a new pane below. Okay, we can actually get rid of volume. We don't need that right now. And we can even get rid of the MACD. We don't need that right now. This one here, what do we have? This is the DJI. Let's move this here. And let's take the SPX and let's move that into the existing pane. So now we have the SPX and DJY in one pane. We also have the 2-year Treasury yield up here in the same pane as Bitcoin. Everything is in percentages. So now what we start to see are some other correlations. You start to see here that as these Treasury yields started rising, you also saw the DJI and SPX going flat. Right? And we can actually convert all of this. We can get rid of the 2-year Treasury yields now because the main thing with the 2-year Treasury yields is that you see as they start rising, Bitcoin has sold off. So that's the main thing. The main reason why this is happening is because Treasury yields are going up. The Fed is announcing they're going to pump less money into the market, which means they're not going to be stimulating it as much, which means the people whose money is in there are selling because they're afraid everything is going to crash because the Fed is taking all their money out. Now, why are they doing that? All right, let's get back to a little bit of the fundamentals. So we come here. The first thing you need to understand is that this entire time period, all right, so this is the Dow Jones Industrial Average and the S&P 500. So these are the main indexes in the United States, right? This is basically following all of the main companies where everyone invests. Now, what you see here is from March 2020 all the way until now, this just consistently went up. Well, how's that possible, right? This was during a global pandemic. The entire economy was shut down. How in the world is the economy performing like this? Well, the reason it was performing like this is because the Fed took interest rates and put them to zero artificially, which means nobody was putting any money into US Treasuries. They were putting money into the market because even the Fed was doing that. The Fed was pumping $120 billion into assets every month throughout this entire time. That was all printed money. They were just creating money and putting it into the market, propping the market up. Well, now what are they doing? Now they're saying, hey, we're going to stop doing that. We're not going to print as much money and put it into the market every month. So they're reducing the quantitative easing. And then on top of that, they're increasing the Treasury yields. So now when they reduce the Treasury yields, okay, down to zero, and when they increase the quantitative easing, meaning that they were printing more money and pumping it into the market, this is what happened. Everything went up. When they reverse it, what do you expect to happen in the market? You expect the market to go down. Now, the interesting thing is everyone says that Bitcoin is following the S&P 500 and the Dow Jones Industrial Average. That's what people are saying. I've seen a lot of good analysts say that, and I'm a little confused by it, to be honest with you, because if I look at these two things, during such time that Bitcoin had already started going down, well, the S&P 500 was undecided, right? It went down at the same time that Bitcoin did here, but then it went back up. It had a massive pump, and it actually then hit an all-time high. It hit an all-time high in January the 5th. Right? By that time, Bitcoin was already down to 47K from its high of 67K. So Bitcoin had already kept dipping. Both the Dow Jones and the S&P 500 hit an all-time high, and then they started dropping as well. Well, that looks more to me like it's not Bitcoin that's following these markets. These markets are following Bitcoin because Bitcoin is the one that started dropping first. The market here is a free market, as much as it can be. Right? You still have options expiries. You have people trading on leverage. You have a lot of whales that can manipulate the market because of its low market cap. But overall, it's not nearly as manipulated as this. So what you start to see is that what's happening with Bitcoin, it looks to me like the other markets are following it. Now, if that's the case, what does that really tell us? Well, it tells me that I don't really care what's happening with the S&P 500 and the DJI because that is 100% related to what the Fed is doing. right? It looks like Bitcoin's related to that too. But the funny thing is that Bitcoin gives you a much better value proposition. You're not long-term relying on the Fed. If anything, once the Fed keeps screwing this up, right? And people don't know what to do. Like, they just are going to assume that if they put their money in here, they're at the mercy of the Fed's manipulation. Eventually, I think you're going to start seeing a lot more liquidity from here coming into here, especially once you start having spot ETFs approved by the SEC. I think a lot more of this money is going to go into Bitcoin spot ETFs. So we don't know when that's going to get approved, obviously, because I feel like the reason they're not approving it now is because if they do approve a spot Bitcoin ETF, I think it's going to have so much money fly into it that you're just going to see the price of Bitcoin skyrocket. And the Fed, the Treasury, the SEC, they don't want that. They don't want Bitcoin to succeed that quickly because it doesn't give them time to succeed. They're immediately going to give the entire market, 401ks, pension funds, easy access to Bitcoin. I don't think they want to do that. So I think they're trying to delay it as much as possible until they figure out how they can control this house of cards they've created. Now, basically what this house of cards has done, it's made it now so that you don't really have an option in these markets, okay? And what I mean by that, if we zoom out, with these markets right here, so the Dow Jones and the SPY, so in orange, you see the S&P 500, and in the aqua color, you see the Dow Jones Industrial Average. Now, what you start to notice here is that if this is continually going up, and now when the Fed starts tightening, they start reducing the Treasury yields, they start reducing the amount of money they're pumping into the market, this starts dropping. Well, what's going to happen if the Fed keeps doing that? If the Fed keeps increasing interest rates and the Fed keeps lowering the amount of money that they're putting in the market, I'll tell you what's going to happen. And anybody can really confirm this. This is exactly what's going to happen. You're going to see these numbers keep dropping. Now, if this was to happen, which it will if the Fed keeps doing what they're doing, well, then that's going to look terrible for the Fed. It's going to look terrible for the Treasury. It's going to look terrible for Congress. It's going to look terrible for the White House. It's going to look terrible for everybody. They don't want this. This is not what they want. What they want is this. They want the economy to keep going up. So what does that mean? Well, if now what they have to do is start tightening so that they can show that the Fed is not going to keep printing money, they're trying to fix monetary policy and all that stuff, well, I'm going to expect that what we're going to see is inflation is going to keep going up. The cost of goods and services are going to keep going up because now the companies are not making as much money for investments to make up for these losses. Prices are going to go up. Now, I think the other thing that we're going to see is we're going to see that all these different politicians, including the Fed, the Treasury, all these people are not going to want to see the markets crash. So what are they going to have to do? Well, they're going to find what is the level that they can increase interest rates to and increase Treasury yields to until such time that the market can no longer handle it. It's just going to keep spiraling down. Then they're going to say this. This is my prediction. The Fed is going to come and say, hey, we are going to stop increasing the rates for a while. We are also going to keep yields the way they are, or we're going to bring them down slightly. We're going to bring interest rates down slightly. They're going to start fine-tuning these things and stopping so that the market will keep going up. As soon as the Fed announces we're not going to increase rates again for 6 months or something like that, the market's going to react and money's going to come back in. So why wouldn't they do that? Obviously, politically, they don't want it to go down, which means that they either have to keep it going sideways and up over a longer period of time. That's what makes them look good. And let's face it, politicians are all about looking good. So I don't think this is going to fall. I think that this is just a false flag. This correction is going to be at the mercy of the Fed. And the Fed, in my opinion, is not going to let the house of cards fall. I think what they're going to do is they're going to taper rates, they're going to stop the increases, and they're going to stop increasing Treasury yields at such time that they feel that the market can't take it anymore because they're all going to look terrible. And then you're going to see both these markets start picking up, going back to all-time highs, and you're going to see Bitcoin doing the same. The funny thing is, that's what I think is going to happen long term because they have no other way to handle this. They have printed so much money now and pumped so much liquidity in the market that the only way to reset it and get it back to normal is to allow it to crash and for there to be a recession. I don't see them doing that. I think they're going to keep manipulating it. And I think their manipulation is going to keep sending the prices up because that's what's going to make them look best. And then they're going to pass it off to the next administration, whether it's Democrats, Republicans, who knows. And then it's going to be the responsibility of the next administration to keep doing the same thing. So that's kind of what I see happening. That's why I think prices are where they are. And let's go ahead and come out of here. And I think right now that considering this as, oh, Bitcoin's dead, Bitcoin's crashing, all coins are dead, well, that's really a false flag, because if we're at the mercy of what's happening in these larger markets, and these larger markets are completely manipulated, and none of the people that control these markets want to see it crash, and they control the supply of money, well, I have a feeling that they're going to figure out a way to control things in their benefit. And I think that these numbers are going to keep going up. And I'm willing to bet that Congress, once again, will probably beat Wall Street in trades, because I think right now they're all buying. That's my suspicion, or they're putting in options to make them a lot of money once the Fed starts tightening again and you see prices going up. I don't know exactly when it'll happen. This could be, a downtrend for a couple of months, maybe the first quarter of the year. And then I think that we're going to see them make announcements that they're going to stop increasing rates for a while, and prices are going to recover. Everything's going to go up. But I think Bitcoin could change its course much earlier than that. So let's get out of all of these traditional markets that are completely manipulated and take a look at Bitcoin. So let's add our volume back in, and we're going to change our volume to an existing pane, not an existing pane. Let's change our volume to a new pane below. There we go. And move it down. All right. So that's kind of what I think's happening overall. That's why I think everything's reacting the way it is. So it's very important for you to have a good understanding of Treasury yields. Compare Bitcoin's chart to the S&P 500, the DJI, and try to figure out what's going on. And keep in mind the other thing with Treasury yields right now, the cost of capital, and that's basically like the cost of debt, the cost of capital, and if you adjust those yields for inflation, so you adjust those yields for inflation and the cost of capital, they're all trending to zero. That's what's happening with those yields. They're all going down. So no matter what, if you're putting money in US Treasuries over time, just because of the inflation and cost of capital increases alone, you're going to lose money. Eventually, people are going to realize that those are the riskiest assets. Why would you want to be in those? I would rather deal with the volatility, knowing that long term, this is a better investment. So I think you're going to start seeing that happening. And I think it's going to happen more with nations as well. You're going to see countries that have, like countries like Brazil, Argentina, Turkey, these countries that need a stable currency start getting into Bitcoin, because it's a free financial system that they can use. And I think that they will. I think that's going to have a massive impact on markets as well as time moves on. Okay. So that's one main thing. Now what I want to look at next is just a couple of fundamentals on the chart. Okay. So not fundamentals, technicals. So we go to the weekly chart, and what do we see on the weekly? Well, this is a very interesting thing. We talked about this on our channel too, or on our Twitter. Well, basically what you're seeing here is that for the second time since 2018, so the last time it actually happened was back here in 2018. So this is July 2018. Since this was a red 9, a TD red 9 is basically a trend reversal signal. So in this scenario, when the red 9 came up, immediately after that, there was a trend reversal. We went down, and then we kept moving up. Now, this was over a very long period of time. So this trend reversal actually signaled a trend reversal coming imminently. And it did come, but it didn't last very long. Now we've come to this level, and here's our second TD9. This happened in June of 2021. What did this signal? Well, within the next 5 weeks, a continued consolidation happened, and then the trend completely reversed and went up. Now we have had this red TD9. So this is, since that first one in July 2018, this is only the second one we've seen. So in 4 years, right? 2018, 19, 20, 21, 22. Yeah, in 4 years, we've only had 3 of them, and this is the third one. So now we see this one here, and this is telling us that we're due for another trend reversal. Now, I still think it's entirely possible if we put that bear cycle info in here. So we turn this on. We can actually get rid of this. We can hide that just in case we need to look at it later. But if we look at this, and then we also look at our max pain area, well, what you'll see now is that we had that trend reversal. We went down. There is still room for us to move down or move sideways for the next 4 or 5 weeks, and then reverse the trend. But this trend, this signal, this red 9, usually tells us that we're reaching a bottom. Now we have another sell-off, and we may have reached the bottom, or the bottom may be a little bit further below max pain. So actually maxer pain. So keep an eye on that. That's something I'm watching very closely. And right now, I think that the key is to just identify where are the good buy targets, because I really consider 33,000 to 35,000 a terrific buy area. I also think that if you get lucky enough to get Bitcoin again at 29 to 32,000, oof, that's going to be a terrific buy area. Now, the other thing that I see on the weekly is for the first time since March 2020, the weekly RSI has also dropped below 45. Now, this is usually a bearish signal. We want to see this RSI come back above the 45 level to be bullish. So until we see that, I would definitely be ready for more downside or sideways trading that keeps the RSI below this 45 level. And then once you start to see a spike and this RSI is going above 45 on the weekly, I think you're going to see something like this, right? This was a downtrend here. Then you saw the RSI start breaking above and things went nasty. Things just went up crazy high. I think you'll see the same thing happen. RSI come up to like the 65 to 75 level when we hit new all-time highs. So keep an eye on these metrics. I am taking a look at this very closely, and you'll have my updates on Twitter as I continue to see these. All right, that was about 20 minutes for Bitcoin. I hope you have a good understanding now of what happened in the market, right? In short, I'll just give you a quick summary of it again. Basically, you have the Fed increasing Treasury yields. You have them increasing interest rates, meaning that it's becoming more expensive to borrow money and you're getting a higher return from the treasuries. Now, what does this mean? If it's becoming more expensive to borrow money, people have less liquidity. That means they're putting less money into investments. If they're getting better yields off of government bonds, then you're going to see a certain amount of money go off of risky assets and back into treasuries. Now, the other thing about this is that as these risky assets sell off, you have large players selling off. So you have big amounts of money being sold off. Now, the thing to understand about Bitcoin too is that even though you're in this sell cycle and things are selling, most of the people selling are just weak hands because the long-term holders are using this as accumulation opportunities. So now we go over to some of our on-chain metrics, and let's actually go to the full screen for this. If we go here, one of the things that's very important is the spend output profit ratio. So this is kind of telling you anything above this blue line is people selling at a profit. Anything below is people selling at a loss. And you can see that the last time we crashed, a lot of people sold at a loss, right? This was in July, like basically May through July 2021. Now what we saw is that during this drop, we have basically still seen people selling at a profit. So you saw a lot of people buy down here that likely sold up here. And now as this is dropping further, well, now it started dipping more into people selling at a loss. The fact is that not very many people throughout this entire drop have sold at a loss. So that tells me that if we're going to see maximum fear, that drop to 33K could happen and you see this SOPR drop a little bit more people sell at a loss until you start going up. The more that we see this going into profit, the more likely it is that it's going to continue moving up. And you have a lot of people that aren't selling anything. We look at the exchange reserves and we start to see something very interesting in the exchange reserves, right? You start to see that throughout this entire time that the Bitcoin price has been dropping, the exchange reserves have been dropping along with it. You've seen peaks of exchange reserves right before dumps. So you see the exchange reserves go up, but then what happens when it dumps? Well, the exchange reserve keeps dumping with it. So what does that mean? The exchange reserve is the amount of Bitcoin on exchanges, right? If the price is dropping and everyone wants to sell, you would expect the amount of Bitcoin on exchanges to go up. More people putting Bitcoin on exchanges to sell. Instead, this has been completely correlated. The amount of Bitcoin on exchanges is dropping as the price drops. That means that as the price drops, more Bitcoin is leaving exchanges, more Bitcoin is going into cold storage. Very bullish in my opinion, because this is just creating a massive supply shock. You take this to the daily, you look at this at a longer term level, and you see now that the exchange reserves are lower than they were when we hit both all-time highs. We are now even lower, right? That's crazy, because that means now that the supply is less than when the price was at 69K. And we are valued lower. It is incredible. I think what's going to happen is as the Fed starts tightening again and they start saying we're not going to increase yields, we're going to keep pumping like small amounts into the market for the next 6 months. Everything's going to remain stable. The Fed's not going to do anything, whatever. Then you're going to see prices going up. You're going to see a lot more liquidity come back in here. And this supply shock's really going to take effect because there's going to be a lot less Bitcoin available. And when that happens, I've tried to explain this a couple of times, and I think some people haven't really gotten it, but let's switch over to the full screen view so I can explain this to you. Okay, so this is a very simple concept. Okay, think about it like this. The supply is dropping. I just showed that to you. Now, as the supply drops, when demand comes in, how do you as a buyer get people to sell, right? I'm a buyer. I want to buy $100 million worth of Bitcoin, right? I'm a big institution, whatever. I'm a country. If I want to buy that Bitcoin, how am I going to get people to sell? Well, the first thing they're going to do is try to go over the counter, maybe buy it at a certain price directly from miners. That's definitely going to happen. So you'll see non-retail, like institutional type investors or nations buying like that, right? Some nations will actually buy using their own exchanges and markets that they're working with within their country. They'll have custodians doing it for them. So you will see some buying on the market. Like they'll be setting orders at low amounts, and you never know what they really do. Maybe some news articles come out to drop the price, they get to accumulate. We don't know. But the fact of the matter is that they are going to be accumulating at good prices. Now, when that happens and that demand comes in, the only way that retail and other people are going to be able to buy Bitcoin is by bidding up the price. And that includes a lot of these folks that are going to be big money. They are going to have to bid up the price to get people to sell because the supply on the exchanges is gone. They might be able to buy directly from miners, right? Over the counter, they can definitely do that, but I think they're going to have to pay a premium there too. So I think what's going to happen is you're going to start to see this continue dropping and the price rising. And I think as the price rises, this will drop even further. More and more Bitcoin will just leave exchanges. People aren't going to want it. You start to see some upticks for people who want to sell at a profit. You might see miners selling as it starts hitting 100K, maybe even 80K. But I think overall, the exchange reserves are going to keep dropping. It's a finite supply asset. That's what's going to happen. And keep in mind, in a couple of years, there's going to be another halving. That means the amount of Bitcoin that gets created per block is going to be cut in half again. So as that happens, and the overall supply has already reduced on exchanges, I only see the price going in one direction, right? Because it's a limited supply asset. It's that simple. And it's the most powerful and secure network on Earth. There's a lot of intrinsic value here that gold bugs and other people decide to ignore. So don't ignore those things. Look at 2 years. So pretty crazy stuff. Keep all this in mind. Let's go ahead and switch back here. We're going to take a look now at the EGLD chart before we wrap up for the day. So this one, a lot of people have been asking me about why haven't you been looking at the EGLD chart? I look at it. I look at it every day. But the reason I haven't done analysis on it is because it's correlated to Bitcoin right now. If it's following Bitcoin, then I might as well give you the more up-to-date information, which is Bitcoin, because this may follow what's going to happen there. So keep in mind here, what we're seeing on EGLD, very correlated to Bitcoin, but we're going to look at EGLD independently and see what we can see. Okay, the first thing, I'm going to get rid of that yellow line, and we'll turn off the VPVR while we're looking at the daily time frame. So when we look at the daily time frame, the first thing you see is that this is kind of our long-term regression lines. And you'll see here that this line here was actually a bottom, that third line, right? This was a bottom for a while, that first cycle, and then the second cycle. And keep in mind, this is calculated by TradingView, so you don't want to look at the volume. Okay, so you'll see that, and then you'll see now we've dropped into a brand new regression channel. Well, what does that tell us? It tells us that right now we are repricing the asset. We are repricing the channels. The channels that we come back to, if we come back to that original channel here, well, when we hit that channel next, the price would be like 1,200. So that channel could become a top, meaning we're setting in new bottom channels as we keep going up. This tells me that it's very likely that we could see some movement for EGLD like this, right? You might see that it goes like this, right? Something like that, consolidation, and then it goes up, because then even when it goes up here, let's say by June 2023 or whatever, this is a massive time frame, right? Then it's still not in these crazy channels. I don't think it's going to move this slow. I personally think that you need to look at it at a shorter time horizon like this to get an idea of what may really happen. This will actually make a lot more sense with other markets. As Bitcoin starts rising, I think we get resistance at the 225, 226 level. I think then we keep going sideways. We're going to have another channel line drawn underneath this. I'll make those channels for the next video. And then I think what you're going to see is us break back into this channel. And that's when the price just in this channel will be up at all-time highs again, like around 500. Then we'll probably consolidate here and we'll start breaking these until we have another massive consolidation. This is kind of what I see happening because it looks like EGLD is moving in smaller cycles. The cycles, bear cycles and bull cycles, are moving very quickly. So as that continues happening, you have to keep in mind that sorry, my mother-in-law just came in. You have to keep in mind that these things are going to likely repeat and likely give us a lot of information. So keep this in mind and keep an idea on it. I mean, this is kind of what I'm expecting. And this tells me that we may hit all-time highs again by June. And that kind of correlates with what I'm thinking is going to happen in the rest of the market. That's in Q2, right? Q1 is January, February, March. And then you have April, May, June as Q2. So in Q2, I really think we're going to start seeing everything hit all-time highs again, because by then we're going to have a much better idea of what the Fed is actually doing too. That's my assumption. Now, obviously, if the Fed keeps tightening and they're just ready to see a recession, well, other things may happen. And then you may see Bitcoin just start getting a lot more liquidity because people have nowhere else to put money. So we'll see what happens. I think either way, Bitcoin's going to recover. But I think right now, because Bitcoin is showing some level of correlation, you have a lot of people selling, and these big fund people that are selling, Wall Street and all this stuff, whoever's controlling this liquidity, they're doing it for a number of reasons. So now I want to show you one other thing, okay? Let's take a look at this. We're going to go back to Bitcoin for just a second, then we're going to trend back to EGLD. So one thing that was interesting about Bitcoin too is January 21st, a few days ago, Friday, okay? There was a large Bitcoin expiration in the options market. So look at this. Just understand this, okay? If the price of Bitcoin had gone up to 44 to 45K, then bulls would have made $103 million. That's how much they stood to make. If the price of Bitcoin was between 42 and 44,000, it would have been balanced between bears and bulls. Well, if the price was between 41,000 and 42,000, bears would have picked up about $82 million. If the price was between 40,000 and 41,000, that's about $132 million favoring the bears. It was actually well below 40,000. So we're talking about January 21st. All right, let's go to the daily chart. On the 21st of January, which is right here. Let's go here. Okay, you'll see what happened on the 21st of January is that the price was down at around the 38,000 level. Now, what does that mean? Well, when we go back to this, that means that bears in the options market made about $132 million because the price of Bitcoin went to where they were going. Here's what I think happened. I think that bears were shorting Bitcoin because they wanted to keep the price down so they can make their money on options. That's another thing that you have to keep in mind. These things are happening, but they can't happen forever because eventually the market cap is going to rise to a point that it takes way too much liquidity to do this kind of stuff. But what does it do now? Well, it tells you that at this time, if they're selling it to make this money, then you're going to get the opportunity to buy under 40K. That's why I had orders going all the way down to 35K, because I wanted to make sure that if the price does drop that low, I'm always able to pick it up. So it's the same reason why for EGLD, I had orders set all the way down to 145, initially 165. I didn't think it would go lower than that. But once it started going there, I set my orders down to 145 until I kind of drained my DCA funds. Now, for anyone who had additional orders set, they would have been able to pick up EGLD at around 115. Now, keep in mind, EGLD's a risky asset, just like every other altcoin, because you're dependent on a team of people. They have to execute. They have to work with partners. They basically, it's like a company. They have to perform for the asset to do well. Now, in this case, what you end up seeing is that the asset goes down in much bigger cycles. So you see the first time it went up to around $30, it went back down to $7. It gave you a terrific buying opportunity. Then it went up to $220 and it went back down to $55, giving you a terrific buying opportunity. Then it went up to $500 or $570 or $60, and now it's down to around $112. Once again, a terrific buying opportunity. So I think these things are going to continue happening, and these cycles are going to continue repeating, because what you end up having is that a lot more people are using the Elrond blockchain. There's a lot more functionality. I mean, let's face it, it's better than Ethereum when it comes to smart contracts costing a lot less to use, and also NFTs. Clearly it's better. You know, there's a lot of blockchains that are better than Ethereum for NFTs, but I think Elrond has beat most of them, because now with the Maiar app, you can control your NFTs from the app. You don't even need to do anything. You can just on your phone connect to a marketplace, connect your Maiar app, get your NFT. It's right in your wallet. You can look at it right there. You don't have to go anywhere special to look at it. You can just check out and show your NFTs to people on your phone. Take a quick screenshot. That's what I do. It's the most convenient thing for NFTs. I've bought a couple of NFTs on Ethereum years ago, and then I never did again because it was a terrible experience and it costs way too much. Elrond has a lot coming for it, and I think everyone's sleeping on HoloRide too. I think HoloRide is one of those long-term investments, and I think it's going to do really well. Then we look here at Ride too. So, okay, we look at Ride, and I've redone this chart a little bit. I've been looking at it, and from what I'm seeing on the Ride chart, Ride actually bounced off of its golden pocket. I'm considering this level as being the top, right? Because this is a more sustained top. This top here was not real. This was due to the bots. But this top here actually was done by people using the asset, even though this was after they announced that you get more rewards on the Ride EGLD ride pool or whatever. You get more locked MEX rewards. It caused that spike, but this was actually market done. Then we come down here, and this looks like what we're looking at now. We're looking at a bounce off of the golden pocket, and if we get support on top of that golden pocket, I'm going to expect Ride to continue rising. But this is also heavily dependent on what happens with Bitcoin, so keep in mind there. Now, if Elrond and Ride come out and there's some new changes to the exchange or staking options for Ride and things like that, well, then you might see something similar to what you saw here. Right, the value of Ride would suddenly go up with its utility. So I think those are also possibilities too. But for right now, I think Ride's at a pretty critical point. I don't want to see it drop below $1.04 again, but I would like to see how it really performs in correlation to Bitcoin. If Bitcoin drops, yeah, it could totally go down like this. But if Bitcoin goes sideways, then I'm going to expect support here and then a rise back up to around the $1.38 level. That's what I'm looking at with Ride. If we look down at MEX, Maiar Exchange Token, this has taken a massive beating. This golden pocket that we have up here doesn't even look like a golden pocket anymore. So let's close this. I've actually adjusted this chart trying to pick what is a market created top. And I don't even know what it is, because this was like, it took massive appreciation initially and has been trending down the entire time. At a certain point, we're going to hit a bottom. And usually new ICO charts look like this, right? That we come back to the original levels, and that's when you start to see real long-term trends forming. So what have I done with my MEX and stuff? Well, I don't really keep much in liquidity anymore. Like, I don't have liquidity pool tokens, but what I do is I took all the MEX that I had gathered, which was quite a lot, and I just keep it in staking. So I'm just earning rewards on my MEX until such time the utility changes, and then I decide to use it in a different way. I'm not getting rid of any of it. I haven't even sold any of my unlocked MEX. Like, I've just kept it all. And then I still have liquidity pool tokens for Ride and EGLD, because I still think long-term EGLD or Ride is going to be a good investment. So I'm keeping that there and earning rewards on it too. And eventually I might put things back into the EGLD MEX liquidity pool. Like, there's a lot of options, but right now I'm hedging my bets. I'm playing it safe, and I'm just not getting rid of anything, because I think that over the next bull cycle, I think that we're going to start seeing a much better pattern form with MEX and really give us an idea of how it's going to perform. Right now, it could even drop below the initial starting price. We don't know. You know, it could go lower. The fact of the matter is, at that point, even now, I may even consider buying some more MEX and just adding it to my MEX staking. But it's a risky bet right now, so keep that in mind. I haven't done it yet, but at these prices, looking pretty good to do that. So I may do it. I may consider doing it while the prices are low and before people start doing the same thing. So we'll see. I haven't made the decision yet, and I probably am not going to let you guys know if I do that, because I don't want to influence the market and say, oh, I'm buying a bunch of MEX, and then other people start buying it. I don't want to cause things like that, but I'm just telling you it's in my head. I may do it. Okay, so that's pretty much it. We've looked at Bitcoin, we've looked at EGLD, we've looked at MEX, we've looked at Ride. right now I'm going to do some other changes to this EGLD chart. I'm going to add more regression lines. I'm going to add more channels, but I still think that it's very important to see what happens with Bitcoin. And if Bitcoin does what I think it's going to do, which is continue to go sideways and consolidate during Q1, then I really think after March is when we're going to start seeing things change. We're going to start seeing Q2, like January, February, March is Q1, then April, May, June is Q2. During that time, I think we're going to start seeing everything going up parabolically again. So we're going to keep a close eye on it. Could happen sooner depending on what the Fed decides. But right now, this is accumulation time. And I hope it stays like this for the next 2 months, because if it does, then as I start saving more DCA funds, I'll be able to accumulate more EGLD. I'll be able to accumulate more Bitcoin. Heck, at $2,000, at $2,300, I may even accumulate more Ethereum. Like Ethereum is looking like a tremendous value proposition right now, especially with the fact that it's so oversold. Then we have Cardano. Cardano looks like a massive value proposition. The amount of dev work being done on Cardano is pretty incredible. And I think what's started to happen now is you start to have this like competition between blockchains. So you start to see like a lot of people on Solana and Elrond and Avax like talk smack about Cardano and all that. And I'm like, what is going on, right? Do investors not realize that this space is going to be massive over time, and a lot of these different blockchains are going to do very well because they're going to have their own network effects, their own communities. They're all going to appreciate to a certain degree. They're all going to have a reason to appreciate. But I think that over the long period of time, you're only going to have a few. And there is the possibility that at some point in time that you have DeFi and everything built on top of the Lightning Network on Bitcoin, and all these other altcoins will crash. That's still a possibility. I don't think that that's going to happen, because I think these are all building their own network effects. They're all building their own communities. And the value really comes from community and network effect. And over time, they're all going to have other options. So you don't really want, in a free market, you don't want everyone to go to DeFi built on top of the Lightning Network. You want them to have other options, because then if they have other options, you have more market competition. You have better things appearing on all these different networks. That's what I think is going to happen. And I think a lot of these networks are going to do very well in the future. And I think right now, keeping everything in only one, it doesn't make sense to me. So I own EGLD, I own Polkadot, I own Cardano, Celsius, Matic, a lot of different things. And no, not a lot, maybe like 10 assets. But the reason I own them is because I see value in each of these in different areas. So I distribute my portfolio to the ones that I see making it. Because then even if I'm wrong about one of them and I'm right about two of them, then I'm breaking even or I'm making a profit, and I feel a little bit more comfortable rather than relying on one single asset. So, that's kind of how I'm doing things. I hope you found this helpful. I know I talked a lot. We're at 45 minutes. What we really do is we try to have some type of podcast type thing. I'm eventually going to update this mic here. Once I update this mic and get the Shure mic, like the nice boom mic that Joe Rogan and other people use, and I get an audio receiver and all that stuff, and I hook this up and change the lighting and make this room a little bit better, you'll start to see a little bit more finesse come into the channel, but still no editing. We're just going to do it straight up, talking actual thoughts, actual information, no scripts, no nothing, but I may start doing podcasts as well, right? With or without video, I haven't decided. So there's going to be more content coming. Make sure you're checking it out. Make sure you follow me on Twitter. There's always a lot of good posts that I'm putting on Twitter. You can see my Twitter page has a bunch of stuff. You get previews coming for the videos as they come. Check out my NFTs. I've just released a new one very recently. There's a trailer for it here. So make sure you check these things out. I think you're going to like them. This is the most recent NFT. I call it Elrond Milton. Yeah, buddy. Love this thing. So basically what I'm going to do is I'm going to create a lot more Elrond NFTs, Bitcoin NFTs, and they're all going to have varying levels of effects, varying levels of art and detail and rendering, and rarity is going to be changing. Like right now, my rarity is built solely on whether something's an uncommon or whether something's a rare. And what's interesting about that is, so if you look at this, right, I mentioned it to someone down here. So you see the where it is right now is that uncommons have a supply of 20, rares have a supply of 10, legendaries have a supply of 1. I'm only releasing 10 NFTs in this set, so there's 4 more left. And what I'm going to do in the next set is I'm going to add commons. So when I add commons, there's probably going to be like 5 commons with a supply of 50 or 100. And uncommons, there'll only be like 2. And then rares, there'll only be like 1. And legendaries, there'll only be 1. So rares are going to, maybe there'll be 2 rares and 1 legendary and very few uncommons. And once we add commons, it'll become more affordable for everybody. People will be able to collect them a bit more. And nobody will take like a big loss if they can't resell for a while or anything like that. Like we'll try to make, as this grows and as the channel grows and Twitter grows, we'll try to make it so that we always have this rarity. Like I'm not releasing 1,000 NFTs. I'm not releasing 2,000, 5,000. No, be 10 NFTs per set. So it's going to be interesting. It's a different concept. Not many people are doing it like this, which is why I think it's interesting. And on top of that, I just like making 3D art. So check it out. Make sure you like it. You can go to my website. It's www.divnfts.com. And when you go to the website, you will see a purchase link that takes you right to my eMoon page if you decide to buy one. We have 17 out of 20 left for this EGLD Molten one. And you're going to have a rare coming very soon. So keep everything in mind. You can go to the gallery and see all the NFTs that I've created. Make sure that if you check out my website, okay, you go to the home page, scroll down a little bit and read this. I have this disclaimer here telling you that NFTs are very high risk. Read it, click the link, go to the Forbes Advisor page and read everything you can about NFTs before you buy any of mine or anyone else's, all right? Understand the risks. Okay, you guys, I think we're all done. I think that's everything for today. I hope this gave you a good idea of where my head's at, what I think's going on with the market, and why I really don't have any fear, right? Because I'm just using this as an accumulation time. I'm going to have, as I have more paychecks coming in and I distribute the money among accounts and figure out how much I want to use to buy assets, how much I want to put in savings, how much I want to put here in cash reserves, all that stuff, I'm going to keep buying. That's my MO. I continue to accumulate because I'm here for the long haul. I see this as a massive, massive, massive wealth opportunity, something that has never happened before in my lifetime. And because of that, and my understanding of technology and seeing where the world's heading, I am making the bets that I think are going to be the most lucrative in the long term, and they are things that I will use. So that's where I am. Let me know what you guys think. Make sure you comment, make sure you like, make sure you subscribe, make sure you follow me on Twitter, and I will see you next time. Thanks for joining me. Peace out.